please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, this is a show where we highlight all the market moves. I'm Nigel D'Souza. With me is Mangalam Malu. Hey, Mangalam. Things not looking too great as we speak on the headline index. The Nifty is moved virtually to the low point of the day. But interesting piece of news there on a pharma stock. Shasun, that stock has been doing well. It's recovered from the day's low as well. And the last couple of weeks, the stock has had a bit of a rally. And, we were attributing it a lot to short covering. Now it appears that there is some fund buying as well. SBI Mutual Fund, they bought nearly around 0.5% stake in the company. And even in otherwise weak market, stocks like these, like the pharma space, they're doing quite strong. And heartening to hear the commentary that came in from Lupin as well.
Absolutely. They were pretty happy on the prospects for the next fiscal, especially the second half of FY19. We'll watch out for that. Pharmaceutical stocks, of course, they are doing fairly well. And while we're on the red, Nigel, it doesn't appear that we're too bad given how the Asian markets are panning out. Just pull up something like a Hang Seng or a Shanghai. All of them are sitting in with cuts in excess of 2%, almost 3% on the Shanghai index. The Nikkei too packing in or seeing gains of close to around 1.5%, further exacerbated by the strength that we're seeing in the yen. But for our markets, it's interesting to see that next week is expiry. We're seeing some writing on the 10,800 call. And the 10,800 put writers, they're running for cover. So just pull up the 10,800 put. There's some unwinding out there. The 10,700 put still has the maximum open interest. So let's see whether that holds or not.
That's right, Mangalam. A couple of stocks that are doing well from the broader markets. We were talking about some of these pharma stocks like Strides that have moved higher. Take a look at Tata Elxsi in the last few minutes, what's happened out there. It was trading in the red. Tata Elxsi should come up for you on the screen. Just take a look at a bit of a U-turn that the stock has done. It was in the red, it's moved into the green. And you have some, some buying on select stocks. For example, that stock as well has moved higher in an otherwise weak market. So keep your eye out in the broader markets. There are various stocks that are moving around. It's red on the screen though as we speak.
The frontliner is not doing too bad either. If you take a look at HDFC Limited, seeing some bit of buying at the lower level, now has moved into the green after being in the red for the larger part of today's first hour of trade so far. There you have HDFC Limited and GAIL. It's football season, but how can you forget the cricketer? Not the cricketer this time. It is GAIL Gas Authority of India Limited. That stock too has moved to the high point of the day. But first up, here are the top stories that we're tracking this morning. It's a weak trade across Asia. Shanghai Hang Seng trade more than 2.5% lower. Dow futures too fall about 250 points as trade tensions between the United States and China escalate.
And oil marketing companies like HPCL, BPCL and IOC, they are the top losers on the Nifty today. Oil Minister Dharmendra Pradhan assures consumers that fuel will be within affordable brackets. That's a CNBC TV18 exclusive.
Big shake-up at ICICI Bank. MD and CEO Chanda Kochar decides to go on leave till the inquiry into the allegations made against her is complete. The bank appoints Sandeep Bakshi as the COO. NS Kannan is the new MD and CEO of ICICI Pru Life.
All right, then as we talk about stocks that are pulling back from the low point of the day, take a look at a couple of these stocks. CG Power. That stock should come up for you. It's down nearly around 6% as we speak. Remember, the last couple of months, it's lost nearly around 35 to 40% of its market capitalization, and that's seeing some selling today. So keep your eye out on that one. Siemens, well, valuation-wise, it's always a bit of a struggle for this MNC. So Siemens should come up for you. That stock as well has moved lower. And SAIL, I understand they've been making the right moves. Now, how much of that is in the price? The employee count has come down drastically. Steel prices are moving higher as well. There is some profit booking, but in the last month or so, the stock has had a bit of a rally after good numbers came in the fourth quarter itself. So you should just pull up a last 1 month chart. You'll see the stock has moved from the mid-70s to the mid-80s odd. But how do you trade the Nifty from here? We're sitting with a cut of around 50 points approximately. Prakash Gaba is with us. Prakash, what's the trade? Red on the screen for the second half of trade? Or are you expecting the Nifty to take some support at these levels?
My stance, my bias has always been on the weak side, downside, since yesterday. So I feel it's down. Maybe we can see levels closer to 10,710. If it goes there, there's a strong support zone in that vicinity.
Okay.
So I'm hoping that if it goes there, that's a place some kind of short covering could come in. But in the upper regions, 10,820 is a stiff resistance. So even if it does go there, until then it's all
10,710 is the support, is what you're saying?
Possible support.
Possible support. All right. And some picks that you have for us?
I have two. I'll go for one long, one short. I think GAIL certainly looks good to me. You also mentioned GAIL. Looks like it's heading to levels closer to around 350 zones. Stop below 340. Should be fine on GAIL. Grasim looks weak. Very good chance Grasim can see a slide to levels closer to 980 zones. Stop about 1010.
All right, Prakash, before we let you go, the thing that seems to be running over the last 2 trading sessions is the footwear space. You have the likes of Bata, Relaxo should come up for you, up about 9% this week, and Liberty Shoes up about 27% in just last 2 trading sessions. So we have Liberty Shoes, the intraday of that should come up for you. Bata, after a 5% move yesterday, is up another 1.5% in an otherwise weak market, mind you. And you have Relaxo Footwear too. So any picks there in the footwear space?
See, Bata has been seeing good up move since level of around 770 or so, because it's bounced from there. And I also like Liberty. Liberty is a stock to watch, seen a good up move, no doubt, but it can still climb higher to maybe around 240 to 250 zones. I do not know about Relaxo, but yes, Relaxo also is looking good, but I'd prefer either Bata or Liberty.
Okay. So Bata or Liberty. Let's go to someone who probably might know something about Relaxo. Nigel, Relaxo you keep speaking about with VLS Finance. What's the story there?
No, that's a normal trading move,
right.
We've been tracking this. I remember tracking that when VLS was 40 rupees, you know, from there. So the reason that Relaxo runs and then VLS runs behind it is because VLS has nearly around 12% stake in Relaxo. The market capitalization of VLS is nearly around 300 crores approximately. VLS Finance, let's get the other chart up. That's around, 300 crores approximately. And its investment, that's the 12%, 11.99% stake that it has in Relaxo, that's worth more than 1,050 crores approximately. That explains why every time there's a run on Relaxo, you see VLS running behind it. And I'll tell you what, why the street is more exciting is because in the last couple of years, they've sold some stake.
Yeah.
So that's why the street says that, okay, it's an investment that they have. And they have sold some part of it, so there is always a hope, will they sell something more? Let's see whether or not that happens. For the time being, it's more or less a trading move. And a couple of other points is that VLS promoters, they have hiked stake a little in the last couple of years and they've paid dividend as well. That's the story. So it's more or less a trading move. Otherwise, Relaxo Footwear, I don't know much.
This reminds me of the nursery rhyme, VLS Finance and Relaxo Footwear. Mary had a little lamb. Wherever Mary went, the lamb was sure to go. So we will watch out for that. But let's get in some commentary coming in from the Petroleum Minister, Dharmendra Pradhan. He says one cut in excise duties will not solve the problem of expensive fuel. Speaking exclusively to CNBC TV18, Shireen Bhan, the minister, assures consumers that fuel prices will remain within affordable brackets.
Taxation is in your hands, and there people would argue that the government has not shown sensitivity when it comes to tax-related policies. This is a sector that continues to be taxed very, very heavily in comparison to our peer countries, in comparison to what is happening globally. Taxes are extremely high and have continued to be on the higher side, given the fact that the government has continued to enhance excise duties. So on that, I don't know if your argument of sensitivity will fly. So if you're talking about a series of measures that will be executed in parallel, what can we expect? What is the thinking? What is the timeline?
Shireen, there are two aspects of this kind of argument. Should we use all our eggs at a go, all our strategy at a go? As I said, this is not a single issue-driven issue. There are multi-dimensional issues are involved. So when I am saying we are sensitive, we will ensure every possibility where well within the accessibility of the common man will be well within the approachable rate, with affordable rate. This is very clear. Number two, you said about the high taxation rate. Let me share my information. All the developed economy, all the major emerging shining economy are with this kind of taxation pattern what we have today. Yes, in our taxation system there are two part. One is put by states, one is put by union government. In last October, union government took responsibility and reduced some component of excise tax. And when I'm saying we are concerned about the issue, we want to react at the appropriate time.
Okay, what does that mean, sir, that you want to react at an appropriate time? Again, as I asked you, is the view of the government now that since we are seeing globally crude prices cooling off and there has been a degree of relief at the retail front as well, that you will not act today, you will wait to see how the situation pans out and then act? Is that what we should understand?
Shirin, one decision is not going, once reduction is not going to solve any problem. It has to be well timed, it has to be looking into the geopolitics, and will be certainly ensure the affordability. When I'm saying the petroleum product will be well within the reach of poorest of the poor and middle class.
In fact, has been on top of the mind for the last few months as well. In a big shake-up now at ICICI Bank, MD and CEO Chanda Kochhar has decided to go on leave till an inquiry led by Justice B.N. Srikrishna into the allegations made against her is complete. The bank has now appointed Sandeep Bakshi as the COO. Ritu Singh joins us with more details. Ritu?
The suspense is finally over, and it looks like the board has decided to give the benefit of doubt to Chanda Kochhar by allowing her to stay on as the managing director and CEO of ICICI Bank. But, the board also said that Chanda Kochhar, in line with the highest standards of corporate governance, on her own has decided to go on an indefinite leave, pending, of course, the results of that independent probe committee that will be headed by Justice Sri Krishna. Also, the board, as expected, has appointed Sandeep Bakshi, who is currently the ICICI Pru Life MD and CEO, as a whole-time director and chief operating officer of the bank to oversee all of the operations. So all the executive management and other executive directors will be reporting in to Mr. Sandeep Bakshi, who in turn, according to the statement of the bank, will be reporting to the MD and CEO, and in her absence be reporting to the board of ICICI Bank. Do remember, Sandeep Bakshi is no stranger to banking. He started his career at ICICI Limited in 1983, has overseen both the wholesale and the retail businesses of the bank before heading on, to ICICI Life and his other functions in the group. Separately, the board has recommended to the board of ICICI Pru Life to consider the appointment of N.S. Kannan as the MD and CEO of Pru Life in the absence of Mr. Sandeep Bakshi, who will be with the bank for the next 5 years at least. Also, separately, we were expecting some announcement on that independent probe committee as well, but nothing was released by the bank on that front. But we have picked up from sources that the official letter of appointment from ICICI Bank has gone to Mr. Sri Krishna only on Friday, and therefore the probe is yet to begin. He will begin the process of appointing members of this independent committee that will be looking into allegations against the Videocon group, and it will comprise of several experts, lawyers, as well as forensic auditors.
Well, thanks so much for that, Ritu. As Sandeep Bakshi moves to ICICI Bank, the board has appointed Mr. Kannan as the MD and CEO of ICICI Prudential. Sandeep Bakshi will serve as a non-executive director for ICICI Pru Life then. But on that note, let's hear out what market experts Ajay Srivastava of Dimensions Corporate Financial Services, as well as Deepan Seth of HDFC Securities, what they had to say on ICICI Bank's move.
I think you've got a balanced guy who's a CEO. He should hold the reins of the company. So to that extent, they've done a decent job of bringing in a good guy to run this bank. I believe that this will lead to one of the breakouts, because two things are going to happen in the next quarter. One, a lot of cleaning up will happen. Second thing is, now there is no more worry about the external pressure. Now at least clarity is there's a 5-year CEO in place. So they know that they can be supported or will be supported. They can implement policy. I think it's a great move, and we believe strongly that this should lead to a breakout of this stock from the range that it has been earlier.
This kind of change can drive sentiment. There is a lot of pain on the balance sheet. There is a controversy with respect to the CEO. We really can't have a judgmental call right now. I think we should see value emerging in ICICI Bank as we move forward into this saga. But it's nothing that I can put on a spreadsheet and evaluate.
All right, on that note, let's slip it a short break. Come back, we get you more of the markets and individual stocks. Remember, the mid-cap index is at the low point of the day. We'll cover all of that on the other side of the short break. Stay with Chartbusters.
Well, global emerging market funds have seen outflows for 5 straight weeks, and the outflow figure last week was around $2.2 billion. How much has the total outflow been this year? And where's the money going? Nimesh Shah joins us to run us through all those data points. Nimesh, over to you.
Hi Nigel. So, after a dream 2017 for emerging markets, now there is a bit of a reality check, and the reality check is in terms of massive outflows for the emerging market equity funds in the last 5 weeks itself. You rightly pointed out, if you look at the global emerging market funds, they have seen an outflow of close to $2.2 billion only last week, which was the highest since late 2017. So clearly there is money moving out of emerging markets, and the larger portion of the flows are moving back to the mother market, which is the US market. Within the GEM funds itself, the emerging market ETFs is the biggest source of outflows in the last 5 weeks or 6 weeks. If you look at one of the large emerging market ETF, which is the iShare MSCI EM market ETF, that itself has seen an outflow of close to $3.3 billion in the last 5 trading sessions itself. So that means given India's weightage of close to 8%, India has seen an outflow of close to $120 million in the last 1 or 2 trading sessions. What is holding India at these levels is essentially the domestic flows, which is at least supporting the markets on the downside. But the upside from an FI perspective looks like it's capped, at least for the near term. Even if you look at from an India point of view, if you look at the Y2Day flows of FIs into India since the beginning of this year, there has been an outflow of close to $530 million in the cash market and close to $5.2 billion in the bond market. Even in the month of June itself, if you look at just last 1 month, there has been an outflow of close to $230 million in the equity cash market and close to $770 million in the bond market. What this Nigel says is clearly there is money moving now out of emerging market equities. There are some major concerns about trade wars, about China hitting back. So that's clearly putting pressure, and the other risk for emerging market equities, especially for India, would be the fact that because of China A-share inclusion, you will see further sell-off in the month of August as far as India is concerned. So clearly from a flow perspective, it looks like there's a bit of scare and money moving clearly out of emerging markets to the mother market, which is the US market.
All right, Nimesh, thanks a lot for that. We will keep an eye out on how flows pan out in the very near future, as you rightly pointed out. But just watch out for Tata Global Beverages. There was a block deal out there, 0.75% in terms of equity changed hands. So it'll be an interesting one to watch out for later as the data comes by from the exchanges. So the stock is at the low point of the day. 0.75% equity changed hands in a couple of blocks. So we will watch out for that. Talking about the FMCG space itself, Baba Ramdev's Patanjali Ayurved may have disrupted the FMCG space over the last 2 years. But now Dabur's vice chairman Amit Burman says lost market shares are back in the food and natural segment. In an exclusive chat with Priya Sheth, he added that Dabur is now well geared to gain from the Ayurveda space in 2019. Listen in.
I think the Ayurveda phase is definitely there. I think our competition has done a good job in increasing that pie, and I think we actually have the backing of science behind Ayurveda, and we have a lot of new products which are coming out in Ayurveda. So yes, Ayurvedic wave is on, and I think we are right there in innovation, in getting the science behind Ayurveda and launch new products.
Over the last 2 or 3 years is when we've seen the maximum growth coming out from competitors, for example, like a Patanjali Ayurved. They've doubled their revenues on a year-on-year basis. But, as of now, when we enter into FY19, FY20, when you look at the market from the outside, do you think that the Patanjali wave is over? Do you think that, the threat that it had on the Indian consumer industry is perhaps ebbing?
So I don't think I'll comment on the Patanjali wave as such, but all I can say is that when the competitors were there, we lost some share in honey, we lost some share in Chyawanprash. We are back to where we were. So the market has started growing because of them.
Well, on that note, we'll wrap up on Chartbusters. You stay with us because Trading Hour comes up next.